Most people enter trading thinking that they'll double their money overnight. And by most people, I mean 99% people who either end up being broke, frustrated, or just quit. But what if I told you that you can be in the top 1% not by being a genius, but just by doing the complete opposite of what most beginners do? Because in 2025, the market hasn't changed, but the game has. AI tools, algos, and the hype culture is at all-time high. And if you don't adapt, you're just food for the sharks. In this video, I'm going to exactly break down how you can stay ahead. From the top 5 mistakes that traders make to the tools, mindset, and routines you need. And I'm sure that if you watch this video till the end, you're not gonna trade like the 99% anymore. And here's a quick disclaimer, I'm not a genius or a professional trader whose advice you can trust blindly. So make sure you do your own research before entering in the markets. Because I'm just a guy who is trying to share what I have learned all these years and not any expert, so do your own research. And I want to keep this video simple for you to understand it and adapt the learnings which I'm going to tell you in this video. So let's get started. Why most traders fail? So now I'm mentioning some mistakes that most traders make, most beginner traders make, and which cost them heavy. So first mistake is they trade with no strategy. They enter trade based on impulse, no strategy, just based on hype, or they revenge trade losses. Revenge trading losses can entirely wipe out your portfolio. Now let's understand why a person revenge trades. So we think that if I have lost the first three trades, the probability of me winning the fourth trade is higher. So I have explained this concept which is called as gambler's fallacy in the video which I made earlier, which is like we think that if I lost, for example, if I lost this first three trades, the probability of me winning the fourth trade increases. So I take the fourth trade, hoping that I'll win in this fourth trade, and which is not true. The outcome of the fourth trade is completely independent of the first three or four or the first or the any trade you have took earlier, and that's the reason why most of the traders overtrade or revenge trade. So now second mistake is not managing your risk. They go all in on one single trade, or worst, they use 10x leverage on a single trade. Leverage plays an important role in trading if you use it wisely. If you don't use it wisely, it can completely wipe out your portfolio or double your losses or triple your losses as compared to if you wouldn't use it. And some of the traders even trade without putting a stop loss, thinking that no, I can't be wrong. The market has to move in the direction which I have planned or which I have analyzed. And they end up losing a lot of money just because they haven't managed the risk, not put any stop loss. Planning your stop loss is very important. Before you enter a trade, please plan your stop losses. Even if the trade is not in your favor, you'll not end up losing much money. Third mistake is blindly following influencers. If a random guy on YouTube or Twitter says that buy this stock or buy this meme coin, they'll jump on and buy those stocks or buy those calls or puts, whatever the influencers are telling them to buy, and get out as it crashes. So stop doing this bullshit. Trade on your own, analyze on your own, make decisions on your own. Yeah, I know it could be helpful if an expert on YouTube tells you to buy or sell some stocks, but please analyze on your own. I'll recommend you not to follow influencers blindly, because I have seen the recent trend of meme coins, that any influencer is launching his own meme coin and telling everyone to buy and the next moment they're dumping those coins and taking the money out of the buyers who bought that meme coin just by listening to them. So make sure you're not one of the guy who loses the money. This mistake number 4 is no journaling, no strategy. So these type of traders enter the market not because they have a strategy or they have a plan, but they just enter because they are getting bored. So make sure you're not one of those guys who enter the market just because they don't have anything else to do, or don't enter the trade if you aren't seeing any setup. Enter only if you see a setup like a trend line breakout or a resistance breakout or breakdown. Enter on genuine setups. Don't trade randomly, and have a strategy that I'll enter a trade only if I see this setup, and I'll follow this setup for all my trades, and do not enter except you see those setups. Fifth mistake is overtrading. trading just because it feels productive. I know I have done this. Just trading because it feels productive. It feels that we are moving, but in fact, we are all draining our capitals and we are not getting ourselves anywhere and just trying to tell ourselves that, yeah, I have traded today, so it was a good day and I have learned something. But in fact, you haven't, because you aren't following the rules. Following rules in trading is so important. Following the discipline, being in discipline, following set of rules, it is very important in trading. You can't just enter the trade randomly and take any trades and become profitable overnight. So please follow set of rules, make strategies, learn from your mistakes. It is very important to learn from your mistakes. Keep learning. To get ahead, you need to treat trading like a business, not a gamble. Here's your blueprint. First is build a process, not just predictions. Have a fixed entry exit point and don't risk more than 2 to 3% capital on a single trade. Second is journal every trade. One of the most important softwares that I found useful is Notion. You can write down what was your plan behind entering a trade into Notion, or you can just have a diary beside you to write why you entered or why you exited the trade, what was your plan, how much risk you took on that trade, or just why did you enter that trade. Third is trade less, think more. Don't trade 5 to 6 times a day. Just focus on quality trades and don't try to maximize the number of trades that you take. It is better to take one single well-analyzed trade which you took with precision rather than taking 3 to 4 random trades. Fourth is use tools the right way. Use tools to confirm, not to decide. I recommend you to use price action, RSI and EMA. You can use 50 to 200 days moving average. According to you, you can use any EMA or do the right research yourself and find useful indicators for yourself. Your brain is the biggest asset and the biggest threat. So greed makes you hold too long and fear makes you exit too soon. And overtrading makes you ignore your rules. So trade wisely. So here's how you can fix this. You can do meditations or call out for the rules that you are going to follow for the trade you have entered. The market doesn't care about your predictions, and focus on executions, not outcome. And remember to ask yourself this question, that did you follow the rules? Even if the trade doesn't go in your favor, but you followed the rules, right? So that's a win. When I started, I blew up accounts too. I chased calls, I overtraded, but when I slowed down, I simplified my strategies, I treated trading like a skill, it became all clear. Everything changed. Here's the truth. I prefer long-term investing rather than option scalping or trading on lower time frame. You ask why? Because I think wealth is built in decades, not in minutes. I'd rather sleep peacefully holding a strong fundamental stock than being stressed tracking 5-minute candles. Trading feels exciting, but long-term investing is what gives you freedom. I'm not saying trading is bad, but if you're someone who is juggling college, work, or business, long-term investing is not smarter, but sustainable. So now here's my checklist before I enter a trade. So do I have a setup? Do I see a setup on the chart on the screen? Am I risking less than 2% of the trade? Is there a reason to enter now, or am I just being bored? And do I have an exit plan? And genuinely speaking, answering these questions saved me 80% of my losses. And if you made up this far, you're already ahead of 99% traders. You just need to implement this learning. Share it with a friend who needs a wake-up call. Like and subscribe if you love this video. And let me know in the comment section if you have any doubts. See you in the next video.